Very good afternoon and welcome to the markets. Asian markets traded mixed today, although the indexes that we track all finished in negative territory. This as investors remain cautious around the US administration's trade policies despite reaching deals with China and the UK in the past week or so. The pullback from a good run on Asian markets is said to reflect growing concern that the rally in global markets recently, fueled by optimism around trade negotiations and signs of economic resilience, may have gone too far too fast. The Nikkei share average declined by 0.98%. The Hang Seng Index lost 0.8%, while the Shanghai Composite Index was also down by 0.7% at the close. Looking at US markets, seemingly took a breather with investors seen as cautious ahead of the release of key data. The market will be awaiting US retail sales as well as a speech from the Fed Chair Jerome Powell, who may likely give a view on the country's economic momentum as well as his approach to monetary policy. The Dow Jones Industrial Average ended the session down 0.21%. The S&P 500 gained 0.1%, while the Nasdaq Composite Index rose by 0.72%. All right, looking at the local indicators, we see that the all-share index is currently down 0.6% at 92,879 index points. The rand is trading at 18.20 against the US dollar, 20.40 vis-a-vis the euro, and 24.20 against the British pound. Gold is trading at $3,175 an ounce, platinum at $980 an ounce, while Brent crude oil is trading at $63.82 a barrel. All right, now we're in conversation with Mohammed Wagli. He's a portfolio manager at Sasfin Wealth. Thanks very much for joining us, Mohammed, as always. So it seems people have been taking an interest in US President Donald Trump's visit to the Middle East. Has there been anything of specific interest for you, especially as he seems to have tagged along a number of leading tech CEOs with him?
Yeah, Nompo, always a pleasure to be on the show. It seems like he brought quite a few friends with him. And, you know, this story's really been doing rounds. You know, he was in Saudi Arabia, I believe he's in Qatar now. The main goal from this trip is really to secure some big money deals. I think as a sort of aside, they do want to be strengthening some ties in the region as well. But it's no coincidence that, you know, these nations are among the wealthiest in the Middle East. I would say that probably the big headline here was that Saudi Arabia would be pledging up to $600 billion worth of investment into the US. A lot of that was to be allocated towards arms deals. So they're spending a lot on military equipment of the Saudis, but the vast majority of it is going to be through sort of major tech collaborations that will also sort of help Saudi Arabia achieve its vision, you know, in the not too distant future as a sort of global tech player. So in that sense, companies like Nvidia, companies like AMD, companies like Tesla, a lot of these companies had their CEOs with President Trump. They're going to be massive beneficiaries, I would say, and this probably wasn't a huge surprise, but Mr. Elon Musk probably stole the show there. He had showcased some of his latest tech, some robots, talked a little bit about expanding Starlink over there as well, and then spoke about those self-driving taxis potentially hitting the streets of Riyadh not too long from now. And, you know, we're seeing more or less the same from a Qatari perspective. They had pledged, I think, close to $200 billion worth of investment into 160 Boeing jets. That's, needless to say, a huge win for Boeing. And truth be told, from a business perspective, it's definitely a huge win for the Trump administration and for the US economy. But again, as an aside, you know, that's not all they were doing there geopolitically. They've been doing a bit of heavy lifting as well. Trump noted that he's going to be lifting US sanctions on Syria just to support the reconstruction efforts over there. And there was also a little bit mentioned just in terms of Iran and negotiating a nuclear deal. So they've been very, very busy over in the Middle East. And I do think that they're going to take this as a huge positive. The market definitely seems to think so. Yeah, well, the region certainly needs a bit more peace. So why do market players get excited when the Fed chair is going to speak? I mean, is he really expected to deviate that far away from anything that he's been saying in public recently? Yeah, so I think as a rule of thumb, whenever the Fed chair speaks, markets tend to get a bit jittery. And within this context, I don't think he's expected to say anything radically different from before. It's more a case of really every word is going to be analyzed just for tiny shifts in tone or emphasis. Tone is really important. And it's just because the market, and I think the economy in general, just looks to the Fed chair to give us a sense of, or give us an idea of the direction that the market is going to take, especially sort of in the short term. He's definitely a lot more clued up than we are in this respect, and I guess we use him to either reinforce the narrative that we've got, or perhaps change the narrative, as changes in the economy sort of are reflected in his comments. So I think at least with this speech that he's going to give, it's very important to note a bit of context, and that is the positive trade talks that we had between the US and China and China in Zurich this past weekend. Needless to say, the market rallied phenomenally on the back of that, and I thought that there were probably fewer concerns maybe around tariffs and the potential consequences just in terms of inflation. And now we're going to be looking to Mr. Powell to reinforce that for us, and there's obviously going to be then an impact on when we can expect those rate cuts, the quantum of those rate cuts. So any sort of guidance in relation to that has the potential to move markets quite substantially. Even though we have recovered, I've got to note that we are still in quite an uncertain environment. So we're hoping that Mr. Powell can just provide a sense of direction here.
Yeah. One last thing, Mohammed, we're running out of time, but I did see that Afrimat came out with their annual numbers. They were reporting that their HEPS were down, that is their headline earnings per share, were down 87%, but their operating profit was up quite nicely, over 36%. Just tell us how that company is actually doing.
Look, they did guide for this in the trading statement in previous weeks, but I think broadly speaking, this wasn't a great set of numbers. We do know and we're expecting sort of weakness here, and we do know why that's sort of come about. The company makes about 60% of its revenue from iron ore. We've been suffering with weaker iron ore prices, so that's put quite a bit of pressure on it. And there has been sort of integration challenges from the massive Lafarge deal, which they undertook last year. I think it was the biggest one in the company's history. Ideally, they'd hoped to see some synergies by now, but it seems to be taking quite a bit longer than was initially expected. And, the company took on quite a bit of debt to finance this, so their net debt to equity ratio has jumped massively from about 1% to about 49%. Again, a lot of this was expected. The market has, I would say, broadly speaking, priced this in. The shares given up about 3%, which is not great, but it's not sort of as visceral a reaction that we would have seen had the market not expected this. Just in terms of the outlook, there is an active focus towards deleveraging the business, towards diversifying a little bit more, which are, two of the main factors that have negatively affected them in this set of numbers. So it's good to see that they're sort of tackling the right issues, but there's no sugarcoating it. This was not a great set of numbers.
Indeed. Mohammed, thank you very much for your time and insights as always. That was Mohammed Wagley. He's a portfolio manager at Sasfin Wealth. After a short break, hopefully I'll be in conversation with the CEO of Equites Property Fund. They've come out with their results and we'll be taking a look at those.